Hey guys, Louie here with a question from a subscriber. This is from Fib1618358, Fibonacci, I will call him. And he says, Hi LL, if it interests you, I have a suggestion for a vid that might be informative for those new to the stacking game such as myself. My question is this, and guys, I'm going to need your help with this as well, so please post your responses down below. My question is this: what happens to the price on semi-numismatic coins and rounds when silver tanks? Does price hold, or is it still pinned to spot? Case in point, the Comsco Silver Tigers, which I know you like, as do I. If silver dropped and retested 1520 low, would the price of the Tigers on the secondary market drop accordingly? When I was a younger guy, I played the silver futures market and worked with Elliott, and he talks about how he thinks that we will be retesting the lows. So 1520, I think the low was in the high 14s though a couple of years ago, but perhaps that was a closing low of 1520. So two things I find interesting about this question. It's just a really good question if you're thinking about buying semi-numismatics. And secondly, I am a big believer in Fibonacci retracements. So there's a couple things to talk about here, but let's go ahead and start with the first question. So let's say silver is $17 today, and you paid $25 for those Comsco Tigers. Okay, now let's say silver goes back to $15. Will those Tigers drop? All right. And what would happen today, and what would happen a year from now if silver stayed low? Okay, that is the question. All right, so you can formulate your thoughts and post them below. But there is a complication with this, and that is the reducing demand for semi-numismatics and collector coins, as well as silver eagles and many other bullion coins. People are not buying as many, they're not saving as many, they're not collecting as many. And this does not refer to industrial metal demand, of course. That's a whole different ball game. But the individual collector is buying less collector coins and less bullion and diverting their money obviously somewhere else. Perhaps the stock market, perhaps real estate, perhaps Bitcoin, perhaps classic guitars. I don't know, but you know, with the resurgence of the economy and the increase in all of these investment opportunities, people are buying less and less silver, and gold for that matter. So that is the backdrop. So if that were not the backdrop, if investor demand were the same, you know, as it was a couple, 3 years ago, I absolutely believe that collector coins continue to appreciate while silver languishes in the doldrums or even goes down. And I think I've mentioned the Libertads I bought many times, you know, around $18, and how silver, you know, just kind of languished between that $15 and $17 area, and still does. But the price of those Libertads, it happened to be a low mintage year, went up quite high and held firm. It has dropped back. Collector coins have dropped back. Lunars have dropped back. Pandas, kookaburras, everything has come back in the collector market. But I do not think that is because the price of silver is dropping. I think because the price of silver is dropping or static, possibly interest is waning in collector coins, and there is an kind of an indirect relationship there. But you know, when I started collecting, I had talked to a very wise coin shop owner, and he basically put it like this. He said, you want to own bullion in a rising market, and you want to own collector coins or numismatics in a falling or static bullion market. And I believe that to be true. However, if demand for everything is dropping, then I think that changes the dynamic, and jury's out on whether the Tigers will hold their value. Personally, I think the Tigers will be, 30-something coins in pretty short order, and possibly 40-something, if things go well and people enjoy the series, irrespective of silver at 17 or 16 or 15. Now, it would be curious, though, if silver were to go to 25. Of course, my number is $20. When silver breaks $20, then Katie bar the door as far as I'm concerned. I'm holding on and doubling down on bullion, and I'm just going to push my collector coins to the side and play the bullion game because I have bullion. So if silver starts to pop, then I don't know. I think people will just be sitting on their collector coins, and the demand will be for bullion, and you won't want to sell your pandas and your kooks, at what people are willing to pay. So there's several different scenarios there, and you may want to respond for the one that you think will happen. And that's probably where I'm going to leave it. I'm sorry, Fib, that I did not give you a really definitive answer, but generally in a rising spot market you want bullion, and I think in a static or falling spot market you probably want collector coins. Of course, you want to get in at the entry prices and do not overpay for them. In regard to his namesake, Fibonacci, I do follow Fibonacci, and I am an amateur chartist, and it has served me well. Let me just quickly tell you what this is, and I don't know the technical definition of it. I only know the practical applications. But a Fibonacci retracement are ratios used to identify potential reversal levels. These ratios are found in the Fibonacci sequence. The most popular Fibonacci retracements are 62 and 38%. After an advance, chartists apply Fibonacci ratios to define retracement levels and forecast the extent of a correction or pullback. Fibonacci retracements can also be applied after a decline to forecast the length of a countertrend bounce. These retracements can be combined with other indicators and price patterns. Okay, so that may have sounded like Greek to you, and of course here are the Fibonacci numbers, and I don't have a clue how those work mathematically, but to boil it down, these 38 and 62% markers are very good indicators on whether trends will continue or trends will reverse. And I've used these to some extent to forecast Bitcoin, which has been on a horrible run lately. Not that I invest in it, but when you see a retracement, and generally that retracement only goes back a third and continues, chances are you're still bullish. If you see a retracement and that retracement has gone back 2/3, from the breakout to the high and retraced 2/3 of the run, you're likely looking at a change in direction. And that's all I'm going to say about it. That's the way I use it. Often retracements can be 50%, and then I find kind of the jury is out. But if you have a popular stock or crypto or even silver spot, if you watch retracements and use the 1/3, half, and 2/3 indicators, they can be very powerful predictors of what comes next. All right, well, potentially people are going to bust me for being an amateur here, but that is the way that I apply it. And thanks to Leonardo Pisano Baglio, an Italian mathematician from Pisa. Hey, my family's from Pisa. My dad was baptized there. Is credited with introducing the Fibonacci sequence to the West. And I'm going to leave that there and let you guys flame me up for probably misstating that. But that is the way that I use it in tracking charts and breakouts and retracements. Okay, but more importantly, let us know your thoughts on where the price of semi-numismatics in general will head if we have a crash back to $15 spot. And please don't pick something that's fallen out of favor. Obviously, with the panda market falling apart, I wouldn't use that. I think the Tiger was an excellent choice, or perhaps the Gallus, or perhaps the Korean coins are very hot right now, so that's a great choice. But you could also use lunars, I guess, or something else that you think has a pretty solid value. Anyway, what are your thoughts, guys? And thanks for sitting through this. Look forward to seeing your thoughts. Bye now.